Good morning, everybody. It's Jeff. It is Monday, the 7th of July, and time for my weekly video log. You'll see the date here I've got is the 5th. That's when I actually put these figures together. Just be a little bit more careful this week because the market was closed on Friday for Independence Day. So the data is a little bit older and requires a bit more checking today once the market opens. So what we do, we sell puts and we also buy high quality great value stocks with low stock buying power usage and income creating potential. That's what it's all about. And as usual, I'm going to look at the market, I'm going to give you some stock picks, and I'm going to show you what's happening around the research and developments on the clubs. So first, the market. Here we have it. So we are at an all-time high on the S&P 500. I think it's on the back of the news of the passing of the bill in the US that gives fantastic tax reductions. See how that works out. The big, beautiful bill. But nonetheless, we're up there and everything is looking rosy. Of course, at some point there will be a retracement, but we'll see when that happens. And the clubs. There are now 53 changes. However, I can tell you since writing this this morning, I've added 6 more and we'll cover those next week. And in fact, there were 10 changes that came in during last week, and these are the main ones. I'm now using the Value, Growth and Momentum score, that's VGM score from Zacks, and I'm looking for A or B out of a range which goes from A to F. So A and B are acceptable. And in fact, I'm thinking of extending that possibly as far as D. So A, B, C, and D being the middle score being acceptable, and the lower ones not. I've also introduced a target for account growth for each of the clubs, and I've related that to the time horizon. But I may also introduce shorter term targets such as quarterly targets, but they are in a monthly format at the moment anyway. I'm also using an agreed time horizon for the club members. That's the point at which they can withdraw some or all of their funds without leaving outstanding put premiums on the table, or I want the put premiums outstanding to be at least close to zero, if not actually there. Or we could agree a dividend policy, but more of that when we get there. I think we've got about 10 months to go in even the nearest case. So the changes in the trading system that I began to implement, I did so now a year ago. It was actually from the 1st of July 2024. So how have things worked out? Well, Diamond did 12 times better in the last 12 months than in its previous 40 months, and 2.11 times better than the S&P 500. I think that worked. Fortune made as much in the last 12 months as it did in the previous 39 months all put together, and was 1.4 times better than the S&P 500. Fortune was starting from a better place, I've got to say. Tease made more than half of what it made in the previous 55 months, which isn't as good, I know that, but I do know why, and I certainly intend to be correcting it for the next 12 months. Sapphire did 3.5 times better. That's a huge club. 3.5 times better in the last 12 months compared to its previous 45 months, and did 3/4 of what the S&P 500 did in the last 12 months. And again, I know why this huge club is a little bit slower, and I know exactly how to speed that growth up. The 100th Millionaire Club, also starting from a high base, it did 2.5 times as much in the last 12 months as it made in the previous 30 months, and nearly 3 times, 2.85 times what the S&P 500 did in the last 12 months. So I think I can fairly say that the changed system has worked. However, we have made a lot of changes, and they have been being introduced over the the months. So we haven't got the benefit of all of them for 12 months. Some, in fact, we haven't had the benefit of all at all because I only put them in this weekend. So I'm looking forward to a really good year coming up. Perhaps you should take my online course if you want to understand what those changes are and introduce them to your own trading. So this week's picks. Here we are. I just want to run through. These are my filters. I've updated these and these are now what I'm using. Firstly, I'm only using stocks that are in the New York Stock Exchange or the Nasdaq. They must have good charts and indicators, low PE ratios. I want the stocks to be in the top 50% of industries, and I want them to be in the top 50% of industrial sectors. I want them to be based in safe countries. So I don't deal in Russia, even Taiwan at the moment. I want the price to be below the annual high of the previous 12 months, 52 weeks. I want a score of 3 or higher from Zacks, C or better for Zacks value score, C or better for Zacks growth score, C or better for Zacks momentum score, and I want the stock to have delivered a positive return in terms of price appreciation plus dividends over the last 3 years, preferably over the last 5 years. I want it to have growing sales and earnings and a timeliness score from Value Line of 3 or better. I also want positive Value Line comments. I want a financial standing of B plus or better. I want the earnings predictability to be 50% or better. Whew. And finally, I want the annual return on investment against the stock buying power to be 100% plus. And of course, the stock needs to be optionable. There we go. And these are my picks for the week. So NVO passed all of the filters. It's a Danish company and it's looking very good. It's my top pick with an annualized return on investment of 176%. Then comes Match, that's the dating company, down as a software and IT service, but very different from the other IT and software services. Not the best of categorization, I don't think, but never mind, that's what it is. And they don't have a positive return over the last 3 years, but I still think it's good enough. You may want to pass on that one. Nice. Nice also has a negative 3 year return, but I like everything else about it. So again, it is one that you might want to pass on if you are particularly hell-bent on only doing the best. In which case you can do QCOM. That passed all filters. And Infosys, INFY, actually it's an Indian company. It did fail on the value line score for on the Zacks score for value, it got a D, but I'm thinking of making a D acceptable anyway. And finally, ALSN, the transmission company, it has a poor sector score, but that's all it was, and that's not a red flag. And let me just remind you that everything needs checking at the time of trading. Do not blindly go and trade these stocks. This is very much for education. All traders have to take responsibility for their own trades. Okay, so the live version of the training course is now finished. However, you can still join it. You can do the full course. In fact, there were 11 lessons were recorded and are available. It covers everything I know and do. And I'm also updating it as we go along. Those people who join it, I'm looking at doing a live presentation in a few months' time to update everything. And if you've only done the online version, you'll still be very welcome to attend that. You can get to the course at myinvestmentclub.co.uk. Go to the site, press on the button, register with the website, then let me know that you want to do it and also that you have sent your cash, and then I will give you access to the course. And if you haven't already done it, please join the Extraordinary Stock Trading System, which is my Facebook group. If you're watching this and you're not part of what's going on, find out more at myinvestmentclub.co.uk. If you want to join us, you'll be very welcome. You don't have to contribute a fortune. £100 a month gets you in, and you can also put in as much as you want. There are many people with 100,000 plus. So that's about it for this week. Have a great week.